Good evening. Good evening. Let's start off with a disclaimer. Investing and trading in the financial markets impose substantial risk to where one can lose all or more than their initial investment. The content provided by myself are for educational purposes only. All ideas and forecasts mentioned within are simply my opinions and not investment or trading advice. Trade at your own risk. All right. We got a few interesting developments after hours already, and market has a funny way of showing its hand. Let's get right into it. All right, I'm only going to be talking about the ES right now. I'm not talking about nothing else. Everything else pretty much the same. Besides oil, we're going to be using QG. Pretty much interest already start picking up on this. I'm going to use anchors off QG. Going forward, let's go. We're going to erase all these. Matter of fact, we're just going to hide them. All right. Let's even get rid of these studies. Plain black. Okay. Real quick, I want to start off with the M5. I shouldn't have been using this contract, the M5. Let's clear off all these drawings. All right. And go right to the U5, which that should be on the continuous by now. But it's just not. So drawings, let's get rid of all of these. Remove drawings, all. Okay. Let's jump back to the M real quick. EF M5, June contract. All right, it's important to understand this contract before we start drawing on the other one. The reason being, we had highs. Let's go to even to the 4 hour at the 2134. All right, this was a measured move off another long. I'm not going to go into the long, but if anything, we just want to see how we got the 2134s. All right, contract high on that June contract. Okay, so just remember the 2134s. We also had the contract this before we started falling from the 2134s. We had a low at a 2068.75. All right, so remember the 68.75. All right, let's switch up to the U contract. All right, the September's. All right. When there was heavy participation on the June contract, we posted a high of 2134. So necessarily, there wasn't a lot of participation in this contract. And it wasn't, as you say, open interest. So therefore, we would still have to carry forward the June contract. So I'm going to mark off 2134. And I should have, let's close, edit. So we're going to put this as 2134. So we just know. Just leave it just as is. All right. I can't seem to grab it right now. All right, let me just redraw this line, make it quicker. Let's do it right this time. There you go. That I could work with. Okay. All right, to the 2134s, Remember the low to 2068.75. Do the same thing. Let's make it a little closer so you can see it. $20.68.75. Okay. I'm going to cancel the right. Okay. There was only one other way to draw it. Only one other way to draw it. From the 2134s, you must use the 2134s and the September's low. So if you zoom in on the September's low, let's pull up the data box. I choose the data box. All right, so low, you had 2061. Mine is a 4-hour chart. Pretty much the 2061s. All right, it's looking in from high to low. It's the 2061s. All right, so then you draw from the 2134s to the 2061s. That being your only other anchor. So just mark that at the same time. All right, and I encourage you to do this on your own chart so you can see the same thing. Dummy. Okay, so you got 2061, 2068.75. These are the two lows against the 2134 highs. All right, so if you had drawn it from the 2134s down to the 2068.75, which is what I was using as my primary, that gives you 1, and let's just verify that that's drawn correctly. 2134s to the 2068.75. All right, and then let's draw it this way. Let's just draw it right on the right-hand side. 2134s to the 2061. All right, and let's verify this one. 2134s to that. What was it? 2061s. Okay. Now, you notice today, let's go to a 15-minute chart. No, I didn't draw it. I'm over here looking for it, and I didn't draw it. So you got now from the 2134s. I swear I had to draw it. Are you kidding me? I didn't draw it? Yeah, because it's all the way over here. All right, so I'm going to do from high to low, from the 34s down to this 68.75. I'm going to make this my dominant. Meaning, what I say on that, I'm just making the line solid so you can see the difference between them. The 2134s to the 2068.75. All right. And I'm going to extend this to the left. On a 15-minute chart, and pretty much see what happened today. All right. I had orders sitting up at the 2101 half. All right. You would round this up. Right. Pretty much everything you would round up. If it gives you an off number, you know the ES only ticks in quarters, you're going to round up. Pretty much this is 2101 half. Right? You're always going to be conservative, meaning that you're always going to give it room to tell you you're wrong. You're not going to try to, looks like, no, you want the number to print. So there's 2109.07, that's 2109 quarters. Right? This was your line in the sand. I gave this as pretty much anything under there to pretty much short. And yes, this would have been your first spot, your second spot, but I didn't want to play guess me games. I was thinking that the ES would dip in, of which it did. It did dip in, but it dipped into the 2134s to 2061s, right? That's the anchor that pretty much it drew from the 2061s. As you see, as I highlight 61s, you see the fib line becoming a little bit more immense. So this was the right draw from the 61s. And the thing is that you never know. This is where it becomes a guessing game. You don't want to guess. You just have those 2134s to 2061s and the 2134s to the 2068.75s. You know you're using a 2134. You're not using 2126, right? If you use 2126, you would have got an entirely different fit. And let's just check that. Right, from the 2126 down. And you can make the case that traded pretty much yesterday too as well. So the only thing really left in the dust was the 2101s. Right? So today, plain and simple, I just got left in the dust. And I got to make a tough decision at night because now we already broke the 86s and we're going to start printing lower. How fast we go down, remember that old profit target? I kept saying the 2053 quarters. That was drawn from the 2134s. The 2134s down to the 2068.75. All right? And that gives you your first measured move after taking a short down here to 53 quarters. That's pretty much a 40 handle drop right there. 40 plus handle, so you're looking at 166 straight down. And these are moves that I look forward to, not these little petty moves, few points here and there. I'm not that. It's very exhausting to play those kind of moves. I look for these kind of setups. All right, so now going forward, let's just see what the action that happens today. So you can understand how I got these shorts. I was waiting for these to trade, right? And obviously I missed this. By the time we started trading into this area, and I would have to really, give me 1 second, bear with me 1 second. Yes, now, I think it was this one. Yeah, I had posted this one, and I pretty much gave you the conservative setup, the 2109 quarters, all right? And meaning that anything under here, it's a short. You start clearing above this line, the short is wrong, plain and simple. So you had a well-defined risk to reward entry, all right? This is pretty much, even if you took the 98s, all right? Even if you shorted the 98s, you're risking 10 and a quarter points, you're risking 41 ticks. And do I got that right? Yeah, you're risking 41 ticks to make 100 and something. All right, so the risk reward is there. And whoever took this trade, whoever just blindly just started shorting into this strength, all right, congratulations. All right. By the time we started getting into these 98s, I was already in the Russell. I was already in the NQs. But then I wanted to use the ES as a swing that I would not touch. I would just let it run to targets, take it, book it, and complete. Wait for the next measured move. Wait for the next rip, then book it. All right. So pretty much what I'm just trying to say is I try to take all around shorts. I'll trade the Russell, the NASDAQ only because it's very volatile. It'll give you well-deserved ranges. So the NASDAQ on trending days can give you, I mean, it's really that the sky. I mean, it's unlimited to some extent, all right? Because pretty much if you know the trend, all right, and you're taking tactical setups in between, I mean, you can bank. Seriously, I mean, per contract, you can bank. There should be no reason why you can't bang 200, 300, 400 ticks on the NASDAQ a day, right? I mean, but you have to be within, I mean, the realms of being correct. I mean that I know I can short this level, and I know where I'm wrong, but you can't just be short in the middle range, and you definitely can't be short in lows, all right? So what happened this week, real quick, just in review, because I want to make this very quick. Let's go to what we are on the 15-minute. Right, these were the 61s that traded. This was just then. This is the rally up. This is the FOMC pretty much. All right. From here, from when we started failing, this was rollover pretty much, this area. We had one measure move, and then pretty much we just went down. All right, we had gap down. We had lines in the sands. We just kept trailing it from gap to gap. And these were the 74s. They were different on the other contract. Once we had broke above here, you know there was something up. We broke, okay, fine, but we still made a new low. This was pretty much a bear trap. All right, so everybody shorting into these lows, we're going to get trapped. You were the reason why this happened. So anybody who had sold anything below 75, you was just pretty much, it was fuel. It was jet fuel for this route. And we, again, broke above it again. We had, all right, you had one measured move. You had two measured moves. And then from there, you just went straight up. And you just squeezed. Because there was no other way to draw it. All right. And pretty much my line in the sand, we had went straight up. I believe I drew it from this anchor up. Let's see if I'm right, which I'm wrong. Yeah, I drew it from up here. Because I remember 2079s was major support, right? You went and traded them, if I'm not mistaken. You traded. Yeah, you damn well did. I wasn't even paying attention there. My mind was elsewhere. I was not watching the E-minis as much until we started getting above these levels. Then I had a plan and I knew how to execute. But pretty much these was the right before the FOMC release, 2079's major support. That had a target up. If you look at this fib, if I'm not mistaken, 2105. See the green line up there flashing, 2104.77. So 2105, that was the target for that move. But pretty much what this just happened from here. Now, if this was the low bouncing off of here, up into the close, that's why I said 86s, need to hold. And here it is now at 9:30 in the evening. This is breaking. We're printing below 86s, and right now we're 85. We're 85 on the print. This is what I was saving my energy for. And I totally just, you had one job and you messed it up. I completely messed this up. All right, I got in on the Russell. I got it on the NASDAQ, and I didn't even put too much effort into those shorts, but I got pretty much highs of the day on those. ES, I'm still without a position. I still have my runners, but it's not what I was supposed to have up there. It's not what I had planned. All right, so where do we go from here now? Shoulda, coulda, woulda. What do we do now? All right. The only hope, and this is a hope, honestly, the way I have seen it since the start of this year, from the start of 2015, from actually, it was right before the holiday, right before New Year's. Once a measure move or a series in whatever direction breaks, you can expect at minimum halfway back. All right. If that breaks, the trend is completely, you're wrong. All right. It's the opposite way. So pretty much what I'm trying to say is that once a measure move in a series break, meaning that once we had broke this low to high, are we hoping for a double bottom right now, right here, 79s? That doesn't seem likely. All right, but let's give it the benefit of the doubt. All right, from low to high, we still have the same anchors. The 2080s, 75 half is your line in the sand. So once we start trading below 75 half, that resistance is validating. All right. Today, remember 2079's trading this area. All right. You had low ticks. Let's see if this starts working. $20.79. Do you see the cursor? Of course, it's not going to work for me, right? Let's move this out the way now. All right. Low of the day. And now you see the new low ticks. See, this had a low tick of negative 1,000, and that was the 1245 candle, 15-minute chart. All right, so that was associated with the minus 1,000. You even had another low. That just shows you I wasn't paying attention. You had another low after that. Yeah, that's right. This 79. Okay, no, I was right. All right, so your low tick of the day was negative 1231. All right. Your secondary low tick, well, your low of the day, this slam down. I'm pretty sure you probably had a bullish divergence. So you just had a face rip. I mean, it didn't go to profit target, but you had a face rip right there. All right, that was FOMC release. All right, so that was just that. That's how quick these moves can be. You're buying, you know where your stop is, bam, done. All right. Once this breaks, I mean, again, let's give it the benefit of the doubt at 75s, but honestly, what can we look forward going forward? All right, you can have a few situations. One is from the high of the day, and just measure from the high of the day down to the lows. All right, so if we get back up to these 91s, I'm probably going to start shorting into these levels. All right, and am I really going to get chopped up and stick a stop here where we can easily just gap up tomorrow and just retest these levels one more time? Pretty much like as a gap up and just fail. So you have a few situations where, you know, it's what do I do? All right. I'm just going to man up and wait for these 91s, and I'm just going to start building into it. I'm going to start with these 91s. If I get trades up into here, I'll take it. If I get on the flip hand, if I get stopped out, I'll take that too. I don't see that happening, but if it does, I respect it because I would not ride this up. Wherever it wants to go, I don't care. I just know that's where I'm done. Done. Pain is done. All right, so all you futures traders out there, better make some quick decisions, because believe me, we can just very quickly just start falling. All right. I don't know. Again, it's some things to judge out. You have one, the 91s. Scenario 2 will be a retest of these levels again. 3 is just straight up. Just waterfalling down. All right. How do you know we're going to start waterfalling down? Below 75s. That's your trapdoor right there. 75 is your trapdoor. And believe it, we have a long ways to go down. I mean, the nearest, the strongest support level that you know you're going to, let's just say I'm pretty sure you would get a definite bounce off of, is well below the 1900. and we're nowhere near there. So why talk about it? I'd rather just put my energy into the levels that's in front of us. And right now, the 91s, the same levels as earlier, from the 98s up to those 01 halves to your line in the sand. Below 75, you got a waterfall down. Ladies and gents, have a good night. Think fast.